24/7. We are in Achievers MCQ series in BFM, and today's topic is objective questions on risk management. Remember, risk management module B of BFM, very important. Okay, so follow this video till the end. Also, I would suggest download Adda 24/7 app on your mobile. In this app, you will be getting all the premium study materials, current affairs, job alerts, plus live classes, plus ebooks, plus you will be getting tests. So whatever you require for JIB, CIB and various banking exams, you will be getting it over here. Okay, so download it right now. Also, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting two things. One, all the updates on JIB, CIB and various banking exams. And second, you'll be second point is free YouTube series, means explanation knowledge series like this one. Okay, on the same channel. Okay, so subscribe, click on the bell icon immediately. This is the new batch starting from February 10th. Join this ASAP. In this batch, we are covering all the four subjects: ABM, BFM, ABFM and BRBL. Okay, and plus electives, you will be getting the recorded videos of that. So everything is there. You can definitely you'll usually benefit from this. Okay, use the code Y432. Now yesterday I had asked you on homework. That homework question was this problem. Yesterday we had covered numericals. Those who didn't attend yesterday's lecture, kindly follow the yesterday's lecture. Okay, very important numericals on BFM module A. Okay, so what was that numerical homework? Spot rate is 45.60 and 55. Forward is 1 month 35.40. 2 months is 55.60. 3 months is 85.90. Transit period was given as 0 days. Exchange margin was given as 0.15%. So you have to find the bill buying rate. Bill buying means what? See this. Always remember the bill buying rate over here is, always remember, bill rate is bill rate equals to spot plus premium. Always remember this, spot plus premium, or if it is discount, then spot minus discount. It's either. Okay, means whether that currency is in premium or discount, it depends on that. Now in this case, this problem was actually a catch for you. Catch means it's the biggest catch for you. Okay, catch means it is something else, telling you something else, asking you something else. Okay, one thing I'll tell you important over here, there won't be any bill buying rate over here. Why? Because there is no premium or discount over here. Why? Because the transit days are 0. Nil transit days means I have to follow the transaction right now. I have to cover up this transaction right now. So if I have to cover up this transaction right now, then this forward 1 month, 2 month, 3 month have no value. No value. Okay, because right now I have to follow only 0 days. So what is the rate I'll be using? I'll be using 45.60 or 55. See here, always left side is buy and right side is sell. So I want buying rate, so I'll be using 45.60, but this is not my final rate because I have margin over here. So 45.60 into 0.15% upon 100. Percent means upon 100. Okay, so what is the answer I am getting? 45.60 into 0.15 upon 100. Okay, so what is the answer I'll be getting in this case? Yeah, everyone, what is the answer? Yeah, it is. Yeah, let me also do it. You guys, me, both of us do it. Okay, yeah. So the answer over here is 45.60. Let me also try 0.60 into 0.0015. So it comes out to 0.0684. Correct? Are you getting this answer? 0.684 also, or let's keep it 68 only. Now what do I do with this margin? Should I add it to this 45.60 or subtract it? I am buying. So for buying, always remember buy. Buy means TT margin is minus. Okay, buy is always TT margin minus. I'll write it over here, TT margin, or they call it exchange margin, one and the same thing. Okay, TT margin, exchange margin, one and the same thing. So this is minus, so I'll have to subtract it. So 45.60 minus 0.068. This is my final answer now. So 45.60, let me do it. 45.60 minus 0.068, 45.53. Are you getting this? 45.53. So this was the right answer. Okay. Everyone should try this problem. Has everyone tried it? Are you getting the same answer? Everyone? Are you getting it same? Remember, this transit period nil means this forward has no meaning. Okay. Whenever the transit period is nil. Okay. Move on. Chalo. Let's move on with the questions for today. The major components of risk management are. So what are the major components of risk? Risk means whether something will happen or not. That uncertainty is known as risk always. Okay. Suppose, let's say, if somebody goes on the 5th floor of any building and says I'll be jumping. So is there any risk involved? There is no risk involved. Why? Because that person is sure to die. If you jump out from the 5th floor, you are sure to die on this. Okay. If somebody stands in front of the running train and says, will I die or not? There's no risk involved over here. Okay. Yeah. So move on. The major components of risk management are risk identification, measurement, control, all of these. So what are these options? Identification, measurement. Identification means I must be able to identify whether there's any risk or not. I must be able to measure. It should be countable. That is important. Here in finance, everything should be countable. Otherwise, it's not finance. Risk control. Control should be the main part. I should be able to control it. Only then it's of any use, isn't it? So the option is correct. D. All of these. Okay. Payment and settlement risk may be on account of. Payment of settlement means what? See here, payment of settlement can be on account of, let's see the options first. Payment and collections, fund transfer, clearing and settlement, all of these. So settlement risk can be because of what? Payment and collections. So can this be the option? See here, settlement risk is always based on what? The time difference. Means somebody is selling from US, seller is in USA, let's say, and buyer is in India. Okay, let's say buyer is in India. So they'll face a settlement risk over here always. Why? Because the timings in India and US are different. Okay, so whenever there is a time zone difference, okay, at that time always you will be having the settlement risk. Always remember this. Settlement risk means time zone difference. Settlement risk. Okay. Got it? So now, payment and settlement risk may be on account of what? Payments and collection, fund transfer, clearing and settlement, and all of these. So it can be of all these, because payment and collections, if there are no collections, then I'm having the settlement risk. If the fund transfer goes haywire, means if it doesn't function, then again I'll be having this. Clearing and settlement. What is clearing? Clearing is basically the method of collection, isn't it? The option is again all of these. Okay. Yeah. Next one. Risk in trading securities may arise from the following activities. Here, trading securities means what? Trading is always done in terms of either stock or bonds or gold, anything basically. Okay. So risk in trading securities may arise because of foreign exchange transactions, equity holding, lending and repos, and all of these. So trading securities will arise because of what? Lending and repos, equity holding, foreign exchange transactions. Will this happen because of foreign exchange transactions? Okay, let me get the answer from your side first. Yeah, foreign exchange transactions. See here, I am dealing in trading securities. So will I get basically the problem in forex? Whenever I am dealing in securities means it's not related to forex. It's related to gold or anything. Yeah, but if that securities, this dollar, if I am dealing in dollars, because dollar is also one of the type of security. If I am dealing in dollars, then forex transactions can affect. Okay, so this can be one option. Equity holding, if I am dealing securities, I am considering as shares. Okay, see here, securities can be of n types. Okay, one is gold. I can deal in gold securities. I can deal in equities, shares. Okay, I can deal in next one, this bonds. Okay, I can deal in dollars. Dollar can also be considered as a security. So any commodity basically can be dealt with as a security, because nowadays what has happened, everything has got a security. Earlier gold means only physical gold was dealt with. Now it is gold securities. Earlier only dollar, physical dollars. Now it's dollar securities. So everything you are having it as a security. You can have it as a security over here. Okay. So forex transactions, yes. Equity holding, can it be due to equity holding? Yes. Lending and repos. Now repos will affect the bonds. So depending on what type of security you are having, this will be affected. So the correct option is again all of this here. Many of them are all of this today. Okay. Which of the following is not an agency service provided by the bank? Not an agency. What is the agency service basically? Agency means the bank acts as an agent. Okay, where bank acts as an agent? Simple example, life insurance. Life insurance. Your bank is an agent. Okay, in agency service, your bank acts as a agent. Okay, but extending credit card, escrow, depository receipt, and securities funding. So where bank does not act as an agent. So where does bank does not act as an agent? Okay. Extending credit card. Credit card is whose product? Mainly it is of banks. When the bank is selling the credit card of their own, only then it is not acting as the agency service. But if that bank is selling the credit card of someone else, some other bank, okay, then it will be acting as a agent. Okay, depending on that. Extending credit card, escrow account. Escrow account means bank is not acting as an agent over here. So is it that? What do you mean by agent? Escrow account over here? Escrow account means bank will act as a broker over here. What is the function of broker over here? Broker acts as a middleman. In that, bank collects the, what is escrow account basically? See this, buyer and seller. Okay. These two are not confident of each other. Means seller is not confident, buyer will pay. Buyer is not confident, seller will send the right goods. So they open a joint account. Okay, that joint account in the bank, and then bank acts as a broker. Okay, middle person. So here also agency services do act. Okay. Next one, depository receipts. Depository receipts means DR. Depository receipt means the bank issues the depository receipts. Now depository receipts, if the bank issues on its own behalf. Okay, means if the bank is giving the depository receipts on its own, then it is not acting as the agent. Okay, or if that bank is giving the depository receipts of someone else or acting just as a agent, like we have these IPOs which are coming in. Okay, for IPOs are for various aspects. IPOs can be for shares also. IPOs can be for bonds also. Okay, for depository receipts also. In that case, if banking is acting as an agent for somebody, then agency services do arise. Okay, securities funding. Securities funding means what? Remember this, securities funding. Now what do you mean by this? This is a very important part. Securities funding means I am getting the securities from somebody as a bank and I am lending to that person. So securities funding, it's a loan. So here the bank is never acting as a agency service. Securities funding means it's a loan. Bank is giving a loan. So whenever any loan is being given by the bank, it's a core product of the bank. What are the core products of the bank? Basically core products are, in liabilities we have saving, current and FD. Basic core products. And in loans we have term loans, CC, and various types of loans. Any type of funding, isn't it? So these are core products. So funding can't be a agency service. Funding will always be a core product of the bank. Okay. Now before going ahead, this is the new batch starting from February 10th. Remember, ABM, BFM, ABFM and BRBL, all the 4 subjects are covered. Numericals, objective questions, this one-liners, case studies, everything is covered over here. Use the code Y432. You will be needing a mentor. Why? Because the portion has changed. I'll show you the portion which is the new portion for this CAIIB. Okay. The operating and the liquidity risk may be on account of, means operating and liquidity risk means, liquidity means, what do you mean by liquidity risk? Here I don't have cash, no cash to pay the EMIs. Okay, no cash for EMIs or for compulsory payments. Okay, that is known as liquidity risk. So the operating and the liquidity risk may be on account of what? Failure to execute settlement or settle a transaction. Yes, means failure to execute means I am not able to settle a transaction. I have promised somebody that I will be paying this EMI, but I am not able to give that EMI. Adverse changes in the cash flows, that can also be one reason. Means cash flows means what? What is happening? I was to receive certain cash flows, somebody was to give me some payment, but he has not given. Why? Because of some problem, any problem might be there. But both these will affect this A and B both. So it is C, A and B. Okay. Operating and liquidity risk may be on account of failure to execute or settle a transaction and adverse changes in the cash flows. Okay. The objective of risk management are survival of the organization, earning stability, efficiency in operations, and all of these. What do you think? Very simple answer. What do you think? Survival of the organization, earning stability, efficiency in operations, and all of these. Yeah, what should be the answer? Yeah, it is simple, isn't it? All of these, because if you can't manage the risk, your organization won't survive. If you can't manage the risk, your earning will not be stable. It will be uneven. And if you can't manage the risk, your efficiency in operations is gone. Okay? Yeah. Which of the following is not an objective of risk management? Not. Here we want not an objective. Not an objective means uninterrupted operations. Yes, this will be an objective, because if my operations are interrupted, if I am not able to perform well, then how will I face my customers? Isn't it? So this is true. We want false. Okay? True. Second one, higher deposit growth. Is this not my objective of risk management? Definitely. Because if I am not able to manage my risk properly and there is no deposit growth, how will I lend? Right? T. Continued growth. Continued growth means continuous growth is should be a main option of this risk management. See here, growth is okay, deposit growth is okay, higher deposit growth, but continuous growth you can't consider this as a main objective, because continuous growth will be the objective of the top management. Okay, creating good image, can this be an option? What about option means image? In fact, this can also be true, because continuous growth can be considered as a objective. Because why? It can happen that suppose if I am able to grow properly and if I am able to manage my risk properly, only then will I'll be able to grow properly in that case, isn't it? But creating good image, this is definitely not the objective, because image creation is the objective of which department? PR, public relations, right? So PR department will always focus on creating a good image. Risk management will always focus on uninterrupted operations, deposit growth, and continued growth. Okay, only then here any PR, any advertisement can function only if my risk is managed properly. Otherwise, if I do the advertisement, go on doing the advertisement, and my risk is not managed properly, then what's the use? Isn't it? What is risk management? Now the basic question, what is risk management? It is the process of identifying and controlling the risk. It is the process includes measurement of risk. Monitor and control of risk is also an important aspect of risk management, and all of these. So what is the right option in this? Identifying, controlling, measurement, and monitor and control. Obviously all of this, isn't it? D is the answer, isn't it? Simple. What is an off-balance sheet risk? Off-balance sheet means these are contingencies. Remember, contingencies. Contingencies means, I'll give you simple examples of contingencies like LC, bank guarantee, BG, right? Court cases against the banks. These are the contingent liabilities. Okay. So, what is off-balance sheet risk? It is a contingent in nature. It can occur on account of issue of guarantees, committed credit lines, and issue of LCs. So can it occur due to this? Here, just now I told you guarantees, committed lines. Sir, committed line means what? Committed lines means actually guarantees only. Committed lines. Okay. So guarantee can have various names. One is committed line, second is guarantee, third is letter of understanding, LOU we call it. So it can have various names. Then A can be the answer, B can be the answer. What about C? Bank's commitment may happen on account of failure to meet pay obligations. So bank's commitment may happen. What do you mean by this? May happen on account of failure. So commitment means what? Failure of whom? Suppose here, if I am the bank, or you understand this concept, bank, okay? This is the customer, okay? Now this customer wants, let's say, to build, he is a, let's say, contractor, okay? Contractor. Now there is a company, let's say L&T, okay? This L&T has given the contract to this customer, contractor, okay? Now for this contract, I have given a bank guarantee, BG, okay? If this customer now does not perform, then what happens? If this customer doesn't perform, this L&T will come to me asking for payment. So this is basically bank's commitment on account of failure to meet and pay payment obligations. Means on account of failure. So if this customer is not able to meet the required obligations, then only I should be paying. So the correct answer will be all of the above in this case. Okay. So contingent in nature, guarantees, committed lines, and bank's commitment. Correct? Now one for your homework. The significance of contingent liabilities is, what do you mean the significance? Significance means it adds to the revenue generation of the bank. Bank may also have contingencies receivables. The bank is obliged to meet the commitment only on account of failure to meet the obligation by the person on whose behalf the bank has committed, and all of these. So what is the use of bank contingent liabilities for the bank? Significance means use, importance. Okay. So what is the importance? You can check it. Tomorrow I'll answer it. Okay. So before going, I was talking about this code Y432. How to use this code? Let me show you that. Okay. Let's go to Adda 24/7 live. Okay. Hold on. Let me go to Adda 24/7. Hold on. See this. Now we are, if you are having the app, I would suggest go on the app. In the app, what do you do? What do you get? You get 1% extra. Okay. So go to the app or go on the site also. Click on this. See this. Now we are on the front page. Okay. In this, click on JIB and CIB. Now you will see the CIB 23. Click on CIB 23. See the batches you are seeing over here. Click on the first batch, English batch. Okay. Click on the batch. Okay. Now you'll get the details about the batch. Details means what? What are the dates? What are the timings? When is it starting? What are the subjects covered? Then what are the mainly subjects covered? Okay, because there are 4 subjects now, 4 compulsory subjects. Okay. So let me come to the fees part. Importantly, see here, you are having recorded 24/7 videos available. Okay. Also 2-way interactive classes. Means you can ask the questions there and then itself. Ebooks are available. Now click on view offers, put the code Y432, click on apply. Now look at this, 23,999 reduces to 5,519. Such a huge discount you are getting, isn't it? Now instead of going for one batch, I would suggest go for this Mahapack. In Mahapack you are getting multiple batches in single fees. Okay, see the JIB CIB Mahapack. Click on this Mahapack. Now you will see the CIB ka Mahapack. Click on CIB ka Mahapack. Now you see the details again. 15 plus batches for ABM, BFM, ABFM and BRBL. 15 plus batches, my god, isn't it? Plus 15 plus full length mock tests, recorded videos are available. You can get the details. Everything is available. Remember, tests are available. So what all do you need more? See here, what do you need for JIB and CIB? Mainly notes, classes and tests. So all of them are available. Click on view offers. Now look at this. Put the code Y432. Click on apply. Now look at this. 35,996 reduces to 8,279. 8,279, such a huge discount. You are getting 77% off. Okay. So go for it immediately. And why am I stretching on the batches? Because look at this. The portion of JIB and CIB has changed. For CIB, the new portion is, look at this, 4 compulsory subjects, right? ABM, BFM, ABFM and BRBL. So 4 compulsory subjects, all of them you have to attend. Electives also, there is no retail elective now. Rural, HR, IT, central banking and risk. So all the five, none of them is retail, all specializations. Okay. Subjective questions are there. Negative marking is removed. Okay. So subjective questions are there. What is subjective question? Subjective means you'll have to write the answers, solve them. Okay. Yeah. Chalo. I'll take a leave. Tomorrow again I'll be back with another series. Till then, bye everyone.